start recording. Boom, it's recording. Hey, what's going on, my VA? I'm going to teach you how to do a high equity list inside a listsource so that you can refer back to this video if you have any questions in the future. What I'm going to do is I'm going to log into listsource. If you need your listsource credentials, you should already have them inside of LastPass. I'm going to go ahead and click on create your own. And we're just going to pull a standard high equity. And this is going to be the same type of high equity that you pull. The only difference is you're going to change the geography. So let's go ahead and pull a free and clear list, and then I'll show you what we do in the next list as well. So we're going to choose geography first. We're going to choose county. We're in the state of Florida. You can choose whichever county that we state. This is how you get to it, whichever one we got to pull right now. Let's go ahead and just pull a random one here for the sake of this video. Let's do let's choose Okaloosa, my main county. So we choose Okaloosa, and you can see in the top left corner here, it says count, and it shows my total number of records that we have. As we move forward, it's going to narrow this down. So the next thing that we're going to do is we're going to click on property, and we're going to choose last market sale date, and we're going to make this from 1900. So just change this out to 1900, and then we're going to go back 5 years. So we're going to do 2015. Click add. And that's going to limit the amount of properties we have that were sold here in the last 5 years. The next thing we're going to do is we're going to choose property itself, because we only want properties for the type of properties that we want. That's parking type. We need property type. And right down below, it has preset selections. We're going to pull single family residences. If I ever tell you to pull any specific property, you'll just choose one of those ones right here. So then click single family residence, 1 to 4 units, and click add. And that's going to populate with all the videos or all of the properties that we need for a single family residence or duplex or anything really that fits within that SFR criteria for the county. And every time as we add this, you're going to notice that on the left-hand side here, you can see what information you've already added. And next thing we need to do, we have our county, we have our date, we have our property type. In our situation, we actually want to also change the last market sales price. We don't like to pull anything that is above $300,000 in value when it was originally purchased because of it being like on the water or something else. So on our standard single family residences, generally this keeps us in our first time home buyers price range, which we like to stay in. So we're going to add that in here, and then we're going to now click on options, and we're going to choose no preference on owner-occupied, no preference on trustees, no preference on corporate-owned, and no preference on address completeness and requirements. If I ever tell you that I want to only pull an absentee list, you can choose absentee-owned. However, generally, we're always going to pull no preference because inside of REISIF, our data management software, we can actually choose absentee versus not absentee, and we don't like to limit absentee or owner-occupied because, for example, tax delinquent and owner-occupied is a more valuable asset than like absentee and tax delinquent for us. So, so that's the main criteria there. Now, the next thing that we could do here is we could also choose equity percentage, which we do need to do. Not equity dollar, but equity percent. And if we're going to pull a high equity list, that's going to be between 40 and 99% for us. And you can see that drastically will make this number go down for the whole county down to basically 11,000 people. But remember, I said we're going to choose a free and clear, but I wanted to choose this first because I wanted you to see the difference that we do 40 to 99% here. And for a free and clear, we're going to do 100 to 100%. The importance of that is because we do not want to overlap the properties that have 100% equity with the 40 to 99%. We want to make those two totally separate lists. So we'll pull the 100% equity, and then next time around, we'll include in our 40 to 99% equity. And if we add both of those in here, you can see what it total goes up to about 18,000 properties. So if we remove the 100%, we see we have about 7,000 or so properties that are 100% equity versus 4099. So technically those are two totally different lists. I'm showing you in one video here. I will be doing a separate video for just high equity, but again, we're going to do the 100% free and clear. So we're going to do that. We're going to add 100 to 100, click add, and now we have a 100% free and clear list. In some other videos, we'll go ahead and we'll utilize the demographics and build a 65 plus list in addition to some others. But generically speaking, this is everything. This is a high equity, free and clear list. So what that means is that there's 100% equity. They do not have a mortgage against this property. Any of those properties would have been purchased before 2015. They would have been purchased with a market sale date between 100 and 300,000. It would be single-family residences in Okaloosa County, and this is our criteria. And you can always reference back to the cheat sheet if you ever forget this criteria. This video is intended to show you the flow of it, but definitely check out the cheat sheet and if you do need that, and that's stored in Trainual, which is probably where you're watching this video right now. So hopefully this was useful. If you have any questions, feel free to reach out to whoever your team lead is, and we'll get the questions answered so that you can have these lists built out. I will add at the end of this high equity training here that we generally only pull these lists once a year, so you shouldn't have to worry about this too often. That's why this training is so important, because I'm sure you'll forget from a year from now. But anyway, thank you so much. I will see you in the next training video.